Good morning, everyone. Welcome to the TradeXchange Week Ahead webinar. This is for the week coming of May 1st. Just a quick recap of last week. And once again, thanks everyone for joining us this week. I know we were off for a couple of weeks, but we are back into regular schedule Sunday mornings for the Week Ahead webinars. A quick recap of last week. All three indices saw a modest gain for the week following a busy start to earnings season. Weakness continued, though, in the small cap sector. Strength in communication services, consumer discretionary, and consumer staples. On the weaker side on the sectors, we had materials, industrials, and the energy sector. With half of the S&P 500 companies reporting, we are seeing a higher than usual number of companies beating analyst expectations, coming in about 80% of companies. The average is 77%. So we are seeing a stronger start to earnings, especially on these big cap tech names. April has come and gone. And we mentioned throughout April the lackluster movements we've been seeing in these markets. We've been watching the VIX trading at levels not seen since 2021. So the volatility is slowly leaving the markets, and the fear is joining the party as well, leaving and basically allowing the markets, as we've been saying, lackluster movements, even with these strong earnings reports. One interesting aspect of the past week, over 50% of the gains this week in markets were off of four stocks: Microsoft, Apple, Amazon, and Meta. On the economic side, we continue to show mixed results, especially on the GDP report that came out with a print of 1.1%, lower than a majority of economic forecasts. Last quarter, we had a print of 2.6%. Inflation headlines came out as well last week, showed a continued moderation on the personal income and spending area. One headline that ended the week was First Republic, FRC. The question comes down to, is it something to even discuss, since it clearly did not have that much of an impact on markets this week? The question, though, is if FRC goes into receivership, what big bank does pick up the slack? And the follow-on question is, will this or any future bank problems have an issue? So it's interesting to see the mentality of traders on these FRC headlines not really caring, as the action in markets showed no impact on these weak headlines on Friday. 30-year fixed-rate mortgages averaged 6.43% as of April 27, up from last week when it averaged 6.39%. A year ago at this time, a 30-year was at 5.1%. An interesting tidbit, since 1982, when the stock markets was higher on the year heading into May, it went on to post a full year gain 89% of the time. This time around, though, we have one word that is causing tremendous headaches as of late. That word, inflation. What will inflation do going into the summer months and into the end of the year? And how would the Fed react to any of these future headlines? That could be the one thing that does change any of the previous economic and data forecasts. Next week, it is all about the Fed. We have the Fed FOMC announcement on Wednesday, with the Fed chair presser following right after the announcement at 2:30 p.m. We also have your employment report on Friday and the continuation of earnings reports, with Apple the focus this week. We are currently expecting a 25 basis point rate hike and a pause. The question comes down to, is what everyone expects going to initially happen? following that meeting, since we are in May, that old adage, sell in May and go away. We'll see if that comes to fruition as well. As we know, recent gains in the markets following earnings have been on the anticipation of a possible Fed rate cut coming this year. That has provided hope to traders. And as we can see, especially on the NASDAQ side, the hope that the Fed is not as stringent as expected. As we know, though, the Fed has continually stated that the mindset as of now is a raise and a pause going into the end of the year and a possibility of a cut into 2024. As of right now, though, as we all know, that mindset is not what the same mindset of traders. The traders are expecting a cut this year. We shall see if that hope comes to fruition and see the impact it has on markets. The opposite side, though, as well, we'll see if that hope does not come to fruition and we see weakness come back into markets. Now, a quick look at your week ahead following that brief breakdown of last week. And then we'll go over questions as always and a few things that we'll be introducing in regards to a interesting collaboration with TradeWire and an update on our community chat room. So we have upcoming US and world events. Top earnings for the week, as always, we'll be focusing this week clearly on Apple AAPL. Monday, economic data. Tuesday, we have the Fed Reserve beginning their meeting, as well as some factory orders in the JOLTS numbers and vehicle sales. Wednesday, it's all about the FOMC announcement and the Fed Chair press conference. We do have some early on economic reports with the ADP employment, PMI composite, and ISM services. Thursday, we do have the ECB on the European side, ECB's rate decision, and ECB's Chair Lagarde news conference. On Friday, we have the all-important employment report, consumer credit, and Fed Speak has started again, members, with Fed Speak Bullard speaking on Friday. Company events for the week, as always, top shareholder and analyst calls, as well as your top conferences for the week. As always, you can reach out to us via email or ask the desk in regards to any breakdown or specific companies reporting at these conferences. Economic calendar. As we mentioned on Monday, we have PMI manufacturing, ISM manufacturing, and construction spending. Tuesday, FOMC meeting begins, and we have the FOMC announcement at 2 p.m., followed by the Fed Chair presser at 2:30 p.m. One of the other key ones we'll be watching on Tuesday is that JOLTS job numbers. That has always been one key headline. Previous Treasury Secretary Yellen, when she was the Fed Chair, always focused on that headline as one of the key indicators that she followed. We'll go over that number as well on Tuesday. Wednesday, we have the ADP employment report to get a better indication of the all-important employment report on Friday. On Friday as well, we have two Fed Speaks, Fed Speak Cook and Fed Speak Bullard. We also have your top economic calendar on the international side, as well as a Fed schedule breakdown and a week ahead TradeX commentary. Earnings, as we see, the list gets larger and larger as the weeks go on. This week, a large list reporting. As you can see, as always, we do bold out some of the bigger names that are on the list. We are waiting a key, though, on Thursday when we have Apple AAPL reporting after hours. Your fear and greed index, currently it's continuing on the greed side, members. We've been on greed for about a few weeks. As you can see, with the lesser activity on the volatility side and the strength we've been seeing lately in regards to earnings. A industry comparison year to date, continue to see upticks across the board, across the US and overseas. Weekly sector performance, communication services, a huge move this week. Consumer staples, real estate, technology, weakness in healthcare, industrials, and utilities. Your target rate probabilities currently, members, we are looking and expecting 84% of a 25 basis point hike. Your 10-year is at a -0.6 on your 10-year 2-year. Your AAII investor sentiment survey did see a small uptick on the bearish mindset this past week, going from 35 to 38%. Small downtick from your bullish mindset from 27 down to 24. The neutral mindset stayed similar to previous weeks. Year-to-date percent returns. As of right now, we are seeing strength in sugar, up over 31% year-to-date. The NASDAQ up close to 17%. Coffee up 11%. Gold up 9.5%. And the S&P up 8.6%. Weakness continuing in nat gas, down 46%. Heating oil down about 30%. And that VIX down 27%. Sector Outlook Weekly, as we mentioned previously, and which has been the top three for basically since the beginning of the year: communication services, information tech, and consumer discretionaries. And the bottom three, which have been fluctuating with these top four: financials, energy, utilities, and healthcare. Your FDA calendar for the week expectations. These are expected PDUFA dates and data presentations, as well as your IPO lockup expiration and your expected IPOs. Now some charts, and then we'll go over some questions, and we'll go over a few other items that are on the agenda for today. Gold. We had no changes to this chart, members. Last week we mentioned how that 2,000 level is so important. We traded all week right around that level, but closed below it at 1994. We continue to trade in that tight range around 2,000 and await a larger volume day for a directional move. A volume pop to the upside, or a break back down on a volume move. SPY daily, no changes to the chart. Last week we mentioned to watch the 410 level, as it is key for a possible downside move. We broke 410, broke the uptrend, and saw a drop to 403.78. We saw a strong bullish reversal back to resistance levels and ending the week right at that point from the earlier February level. We're watching to see if we're going to be building here. Will it be similar to August, where we built and we saw a strong move to the upside, or is it going to be a February move where we built and saw a downside move? Watching this SPY very closely. NASDAQ daily, we have no changes to the chart. We are back to another test of the upside resistance level. 12-50s continue to be on watch as short-term downward moves are seeing support tests and bounces. So we are watching these ranges very close as it is testing back to February levels. That's your NASDAQ. SPY, as we mentioned before as well, we're watching these patterns, watching to see resistance, to see if it continues or we see a break as the previous levels. That's your SPY daily on the moving average and tech look, as well as the triple Qs, your IWMs, and your 10-year yield daily. Clear look on a 10-year yield daily. We did add this short-term downtrend right here. The 10-year yield continues to trade range bound. We are still watching a large range for now, the 3.4% to the 3.6%. Watching for any directional move on any of these breaks to the up or down side. Diamonds on a moving average and technical look. Your IWMs, no changes to the chart, members. We mentioned a range was being built on the IWMs. We mentioned a watch for a downside break of 175. That could test the 170 level. Last week, we saw a break of 175 and hit a low of 170.94. Following this break, we saw a bullish pop back above the 175 level to end the week at 175.20, right at that resistance support line. We're watching this downtrend very closely for a possible upside move or a trade along this downtrend moving forward. HYG daily on a tech and moving average look. S&P 500 daily. We added a second short-term uptrend right at this level. We mentioned last week to watch that uptrend, and if we break, we could see a quick shot lower. Last week, we saw that break, and we did see a quick shot lower. But that strong bullish move that we've been seeing in markets has denounced this uptrend, creating a new uptrend and trading right back to resistance. That's on your S&P 500. Your VIX, no changes to this chart. Look at this chart on the VIX. This is a weekly chart going back 3 years because we wanted to show the previous lows in 2021. This is what we call a volatile chart. The VIX is sitting at levels not seen since 2021 and right at a very key level support. 20 is a clear upside resistance that was tested for the past few weeks. Stay tuned, as these levels are very important for a clear directional move, continuing to the upside, or a reversal if we retest that 20s back to some weakness in markets. Oil, no changes to the chart, members. Two things we mentioned, it's supposed to be things, not things. Two things we mentioned last week: a gap fill to come, which we saw this week, and tested perfectly that support level with a downside support test and a reversal back above short-term resistance. We continue to watch these key levels for the next move. The range currently 75 to 80, and we're watching for that volume move on crude oil. US dollar. The US dollar continues to trade right on the trend line and support and resistance levels. Very tight range between the 101s and 102s. Volume is key. We mentioned last week that we are waiting for a directional move to show conviction to the upside or downside, which we still have not received. We're watching this very closely, as the move in the US dollar could as well indicate a move in all our markets. Bitcoin daily. No changes to the chart, members. We mentioned how important that 30,000 level is to the upside last week. We tested it, ended below that level at 29,515. We continue to watch the 30,000 level and support levels below for a directional move. So we're watching these very closely. It popped, tested 30,000, could not break above it with the volume, saw that weakness come back, tested support. Now we're right back to that 30,000 level. Very key to watch the next move on Bitcoin. SMH on a moving average and technical look, and the euro. No changes to the chart. We mentioned that a key level resistance is in play here at the level of 110. Basically ended at one spot, 1016. We continue to trade along that range, ending the week at 110.16. The 109's downside support with the 110's range as upside resistance, where we continue to build a range base. Watching the volume move, which is key, members. Look at this being built at this point. We're watching to see if it's going to be something similar to what happened in late December, where we saw a little downtick but a strong move to the upside, or something that happened last June, where we tried to break and we saw the weakness ensue. This euro can correlate with the US dollar as well as a key indication in market activity. So a few things that we want to do a quick update, members. Then we'll go over a few questions that we have via email. If anyone has any questions, you can shoot us an email. You can shoot us a message in our chat box. We'll leave it on the economic calendar for the week. A couple things we want to take a quick update on: our community chat room. We're going to be providing a basic beta look in the next week or two on the community chat room. We are very excited to release that, and we're going to give everyone a quick look in the next week or so, and we would love some feedback and comments and ideas in regards to what you would like to see in the new UI interface of TradeXchange. It looks great. We've been working on this for the past few months. We're going to do a whole revamp on the UI of TradeXchange. We're very excited. We're taking all our feedback from our members and putting it into that new design. We'll be releasing a quick look in the next week or so, and we will really appreciate any feedback and thoughts in regards to the new UI of TradeXchange and the community chat room that we are working on diligently to get that released in May. One other thing we've worked with TradeWire. They released a free type of version, members, of a breakdown on a day-to-day basis on insider purchases, sales, and also SC13Gs, Ds, and all that sort. It's free for everyone. We would love to get feedback and what anybody would be interested in looking at on an SEC type basis. We're very excited for this. This is a free delayed, somewhat delayed, but we do get the free versions on the TradeXchange side, but a free delayed version on the free side in regards to insider purchases. You have your form, you have the amount, who purchased it, a link as well to the actual SEC document. So it's very exciting. that we're working with TradeWire to release that for all our members and for anybody else as well. So that's something very exciting that we're working on the TradeWire and the TradeXchange collaboration. So members, we'll open it up for any questions. We do have a few questions in our emails, and we'll be right back when we get those questions. Anyone has any questions, you can shoot it in the chat box. A few questions in regards to our thought process for the week ahead. Members, in our opinion, it's a very busy week. We have the FOMC meeting on Wednesday, which is key for a clear directional move going into your summer months. We have that Fed Chair presser at 2:30 in the afternoon with Fed Chair Powell. The thought process here is not exactly, it's the way he says it. We've noticed a lot of people have been watching his mannerisms in regards to his follow-up and his question answering. So we're going to keep a close eye on that as well this time around on the Fed chair side. We have earnings, Apple, which is a clear key indicator in these markets. We've been seeing strength across the board on earnings. Apple is the key that everyone talks about. Every company, some way or another, has some sort of interaction with Apple. So we'll see what they come up with on Thursday after hours. And economic reports, members. We have a pretty busy week. We're going to be focusing initially to begin the week on that JOLTS number with the job openings, and to end the week on that employment report and the wage inflation, which could be a indication in regards to the job side, which has been so strong as of late. So we'll be watching those two key numbers this week, followed by the Fed, and continuing to watch earnings, especially Apple, AAPL after hours on Thursday. It's a very interesting market, members. We are in that summer season where volume clearly starts to dissipate, but we've been seeing that as of late. We provide those volume numbers every day in the news desk, and those numbers have been lower on an average basis for the past few weeks. So we'll see how much less it could be going into the summer, and that is also key in regards to market activity this time around. So it's a pretty busy week. We're excited about the new UI interface for TradeXchange with the community chat room. Very excited to get feedback on that. We'll be sending out to all our members via email in the next week or so a brief look at what we're finalizing, and hope to release that this month and start to build up the TradeXchange community to a much stronger and successful mindset. Once again, members, we appreciate all the feedback every day during the week. We're always striving to get the TradeXchange better, and we always are open for conversations. Thank you. We want to wish everyone a wonderful rest of the weekend. Enjoy, be safe. TradeXchange out.